Welcome into the ArtGibbs Sports Business Podcast. This is episode 8, and boy, do we have a fun one today. We're going to take you through John Malone and Liberty Media's purchase of Formula One, and we're going to take you right through the entire transaction. It should be really, really fascinating. All right, so just as a bit of a intro to this, I wanna say that part of what we wanted to do here at ArtGibbs, and especially with the media component, the podcasting, the videos, that kind of thing, is take some complex topics or some kind of fly on the wall type stuff and bring them out into, a more accessible state. And it could be something that, if you're in school, you can reference and it can help you. It can be if you're just, a person who has an interest in business or finance. We wanted to be able to share some of that stuff with these business stories. And that's why kind of in the original podcast, you can see that we discussed and referenced the idea of stories and what stories can bring to learning, basically, in any situation. And they can take complex topics, they can take nuanced topics, they can take social topics, they can take all these different things, math, etc., and put them all together in a story, and someone listening can take little pieces that they like and take little pieces that they may or may not have known, and all together it can be very, very fascinating. And in this episode, we're going to take it's a bit of a risk. We're going to see if we handle it well or not, or if it doesn't work for podcast or it does. And we're going to, as I said in the intro, really get into this transaction. We're going to kind of go through it step by step to some degree. There's certainly more detailed information that you could use, but I don't think that would be work for a podcast. So I would say, as far as a podcast, and certainly as far as any news coverage or anything that's out there in any form, this will be the most detailed look at the transaction, and we will define terms along the way if needed, or as we feel that they're needed. But again, that might not be correct. It might need less definition, and you're going to be banging your head against the window wondering what the heck's going on and why I keep explaining stuff, or it's going to need more explanation, and you're going to watch a sentence go by and off into the distance like a Star Wars intro trailer or something, and be kind of frustrated in that sense. So it may not be perfect, but we're going to attempt to characterize the transaction. We're going to attempt to show some of the history, some of the tight history of the steps that took place in negotiating the transaction, and some of the considerations that were made in the transaction. And these are relatively common considerations in M&A, but again, they are not necessarily talked about unless you're in a specific class in school or something talking about it. So we're going to try to bring it all together, provide some color, explain some of the basic facts of what happened with the Formula One purchase, and then explain some of the details of the purchase. And again, hopefully there's tidbits throughout this entire podcast that you can take and learn something from, or that you take and they spark future research, or that you take and they're just entertainment. And so, and I'm not sure how it's all going to fall. So we're going to see. So with that kind of disclaimer, we're going to jump into first a little talk about F1, and then we'll get into the transaction, basically. So here we go. Formula One is a worldwide sport. Over 1.9 billion fans watched in 2019, and another 4 million watched live at the races. The sport travels to every continent, performs live in front of dukes and duchesses and kings and queens and celebrities, and Justin Bieber hanging out of a window in Monaco in a tie-dye shirt, and all of these things. They're all there. The celebrities mix and mingle in the paddock and the pits. It's a glamorous sport which travels the world. And the cable cowboy America's largest landowner, John Malone, looked to purchase all of it. And he did in 2016. A little bit about John Malone. John Malone's one of the richest people in the world. His net worth is estimated around $8 billion. He's an operations research PhD from Johns Hopkins University, actually. He worked at Bell Labs and McKinsey and Company. And at McKinsey and Company, the travel really annoyed him, drove him crazy. So he ended up taking a big pay cut and going to work for General Instruments. When he was the head of Gerald Electronics, which was a division of General Instruments, Bob Magnus, the founder of telecommunications, approached him in 1972 and to see if he would have interest in running his telecommunications company. At the time, telecommunications was in a spot of bother. It had gone public in 1970, but by this time in 1972, it was in some deep trouble as far as the debt was concerned. According to Business Insider, the sales had dwindled to $12 million per year and had a debt number at $132 million. Malone came in, he staved off the bankers, negotiating with them to hold off from a pure loan call, and in the process ended up saving telecommunications from a bankruptcy filing. Eventually, Malone turned telecommunications around. By 1981, Telco was the largest cable company in the United States. Since then, Malone formed Liberty Media, which he's been involved in a massive amount of transactions. He's been involved in Discovery Channel. They own a piece of the Atlanta Braves. Just many, many things. And he has the nickname of the Cable Cowboy because of his affinity for land. As I mentioned, he's estimated to be the largest landowner in America with 2.2 million acres. He owns a large cattle ranch I can't remember the name of it right now. And he's been known for big deals and great deals. He's worked with a lot of big business people, obviously. Mario Gabelli calls him one of the great tax guys. He's been in discussions with Dahi, who he, mentioned to David Faber in an interview. Basically got Sotheby's for free. Once you included some of the receivables and real estate, Dahi basically got the company for free. And again, one of his biggest deals, and certainly one of his biggest recent deals, is the purchase of Formula One. As we discussed briefly on the previous podcast, actually, in this new world of broadcasting, cable broadcasting, with the internet over the top, technologies and that kind of stuff, scale matters greatly. And that's a John Malone, quote. He discussed that in his interviews with David Faber, his annual CNBC interviews, which are fantastic, by the way, if you want to listen to them. There's a lot to glean from those. And, for instance, in one of his early interviews talking about Discovery Channel's purchase of Scripps, Faber mentioned, hey, look, the market doesn't like this. And John Malone's quote back to him was, quote, David, most of the money I've made in my life is when people don't like what's going on. That's when things are cheap. That's when there's opportunity. So it's cool. I mean, there's a lot of interesting stuff there. But one of the things, again, that he talked about was this scale mattering so much in this new world of cable broadcasting and leverage in this new world of broadcasting with all of these technology platforms and all of these kinds of things. Content matters, and it's not content in the old traditional sense of old studios where they make a one-off movie, they sell it to Netflix, and especially in this environment, they're actually not even in that big of a bargaining position. Netflix and a lot of these providers are negotiating that tail revenue away. So this traditional studio sense, they're making these movies, but if one studio won't make it, another studio will make it, and they're kind of these one-off pieces. And again, like we discussed in the previous podcast, they have a lot of similar themes and things like that, and they're actually not that powerful in terms of drawing people from one platform to the next. So these purveyors, these technology platforms like Netflix and the Amazon Prime and things like that are actually in a pretty favorable negotiating position and are able to negotiate this tail revenue away and just pay a one-time fee to these studios. So the big source of leverage then, and Malone mentioned this, is this idea of sports. Sports are dynamic, they're constantly changing. and they create a lot of leverage because they actually do draw people from one platform to the next and that kind of thing. And again, you see it with these franchise values in the NFL and the TV contracts that they can negotiate. You see it with the sale of UFC. You see it with the sale of IndyCar. I mean, they're just, all of these things are setting record after record after record. It's a time when the sports matter greatly. In the cable packages, they matter greatly for content, for these providers and these huge capital intensive moves to get platforms going. And then the scalability of that matters, and that unique content helps drive that. So sports are a very important piece in all of this. So you can see where there was some desire potentially when referencing scale and global scale being so important with these technologies that cross countries and that kind of stuff, that Formula One may be a great option for Malone's Liberty Media. Some other notes in their SEC filings as to why the transaction was attractive for Liberty Media, was kind of the idea of owning this sports entertainment business. They love those. They already control and own a big percentage of the Atlanta Braves. So they own this sports entertainment business with an attractive financial profile already and a global brand with great demographics, and that's very attractive to Liberty Media. They also felt, Liberty Media did, they also felt that they could leverage their expertise in live events and digital monetization with Formula One, as well as potentially grow sponsors and partners within Formula One. So you've got this scale, this content, global brand, all of these things fit into Formula One, which competes in 6 of the 7 continents, and all of this kind of stuff. And pre-COVID would cross 2, 3, 4, 5, 6 time zones from one race, to the next. And so it fit all these things. So it was something that Liberty Media was interested in and pursued. So now we'll dive into it. The transaction, the history, how did it begin? It's not been discussed at this level of detail in any publications or papers or anything that I'm aware of, or press releases, but it is all available publicly. There's no inside knowledge here. So we'll kind of dive into the history here. So the discussions to first purchase Formula One began in September of 2013, when Liberty Media reached out to CVC Capital Partners Limited, who controlled the CVC funds. And the CVC funds owned Formula One through their ownership entity, Delta Topco, or Topco, however you say it. I don't know. So Liberty Media reached out to them to begin discussions of a potential transaction. Again, that was in September of 2013. There was interest, and by November 1st of that year, they had signed a confidentiality agreement. Discussions continued through 2013, 2014. They met in the New York City offices and then CVC's offices in London. Informal discussions continued, at various times throughout 2014 and 2015 until October 28th of 2015, when Liberty Media met with CVC and Formula One's financial advisor, Goldman Sachs, to outline a structure. 3 days later, Liberty Media engaged Morgan Stanley as their advisor. So they both had advisors set up here at the end of 2015. Enterprise value first really came up at a New York meeting in spring of 2016, where the enterprise value was discussed to range between 7.5 and 8 billion. The idea of a portion of this transaction consisting of Liberty Media tracking stock was discussed. And I'll just interject here, tracking stock or tracking common stock, which is what's discussed here, is basically a tracking stock operates just like common stock, except the tracking stock tracks a division or some kind of subset of a company and is based on the performance of that division or that subset. It's created just like common stock in terms of an equity capital raise. The issuing entity raises money through the sale of that stock. The voting rights can be a little different in terms of basically usually they have less voting rights. But again, that tracking stock will will mark the performance of that division. And if the division does well, the stock will go up. If the division issues some sort of dividend, the stock will receive those. And it's a way for a company to, if they're already a public company, they can kind of unlock value in a division that, may or may not be totally aligned with the company and might benefit from that sort of separation without doing a full-blown spinoff. And in Liberty Media's case, they're a company, they issue many different tracking stocks because they engage in these large transactions. And although they themselves are basically a private parent, they have all of these different tracking stocks that are public, that are subject to the SEC in that way. They can be bought and sold by individuals. For instance, the Atlanta Braves have their own tracking stock and that kind of stuff because Liberty Media does these big transactions. And as you'll see, they use tracking stock in different ways within the transaction. And that tracking stock being out there allows not only the equity capital to be raised, which is obviously the most important to Liberty Media, but it allows for other people to invest in that and experience that upside potentially with those divisions. So that's tracking stock. On May 5th, 2016, Liberty Media's legal advisor, Baker Botts LLP, sent a revised term sheet to CVC in which Liberty Media would acquire 100% of the interest in Formula One. And additionally, this term sheet included exchangeable loan notes to be issued by Delta Topco, which is this ownership entity of Formula One. At this time, on May 5th in 2016, there also was a due diligence request sent by Baker Botts to CVC. And throughout negotiations at this point, as they were starting to determine that there would be a component of stock and of tracking stock, the cash component, the enterprise value was always right around that number, that $8 billion number, very close to it. But the point of contention in a lot of these negotiations was the cash component versus the stock component. As negotiations continued and increased due diligence review continued, the two parties entered into a confidentiality deed on July 6, 2016, which replaced the previous confidentiality agreements between the parties. Now, the confidentiality deed and the confidentiality agreement are very close, but there's some differences in legality based on countries that you're in, and generally the confidentiality agreement is tough to enforce without consideration passing between individuals, between the parties that are in the confidentiality agreement, whereas the confidentiality deed does not need consideration to pass through to be better enforced, and usually the deed has longer timelines of enforceability for the parties. So, but they are close. So on July 19th, there was a meeting in London to discuss some of the mechanics of the transaction. The parties agreed that the first step, equity purchase, would be unwound immediately prior to the closing of the second stock purchase agreement that would allow the selling shareholders to deliver all 100% of the equity at that time of that second purchase in the appropriate amount and form. And we'll continue through with this, and then we'll stop and explain a little bit. Liberty Media proposed a $75 million discount at this stage, and that would be applied to the first stock purchase and be repaid upon closing of the second stock purchase to show that the price was not for a controlling interest. So let's dive into that a little bit, this July 19th thing, and kind of explain it. Basically, the idea was that, and you've probably read this in many publications and things like that, that Liberty Media already owned 18.7% at Formula One at like $746 million or whatever. You can read that at the as when they agreed to do the 100%, and that is technically true, but it was all part of the one transaction. And this first effectively all cash purchase, it wasn't effectively, it was all cash purchase, was done to affect the next transaction. It effectively represented the cash, the vast majority of the cash needed to purchase the whole thing. And that was done first. And what Liberty Media is talking about here in the negotiating of the $75 million discount is that they're saying this $75 million discount shows that this 18.7% is not a controlling interest, and that this higher price is for a controlling interest, and in this case for 100% of the stock. And so what happens is Liberty Media is saying, hey, we're going to do this initial cash purchase, but then at the time of the second transaction, we're going to unwind this whole thing. And then we are going to basically buy all 100% of it, and it's going to be in this $821 million of cash, which is the 746 without this $75 million discount. Now, obviously, Aswath Damodaran, I hope I'm saying that right, then the New York University professor might have a issue with that. His whole 20% control envelope example you can go find on his lectures online, where he jokes that if you put a $100 bill in an envelope and you write the word control on it, an investment banker will pay $120 for the envelope. But that is the case, and obviously in many situations that a control premium is paid, and it just to kind of go down that road a little bit, that's the excuse that's made in a lot of board and management sort of grip on companies, is that their excuse for using things like poison pills and these other anti-takeover measures are that someone shouldn't be able to just accumulate all the stock that's out there without paying a control interest. And again, in business, many times a control interest is paid, and if you're selling someone a big block of stock, you might negotiate a price above the current market price, depending on the float levels and that kind of stuff. And then by the same token, anybody purchasing a entire company, you're gonna pay a premium for that stock. And you can see that, for instance, the company, Verso Paper, that got into, kind of a big tiff with some shareholders. That was their whole thing was, well, these guys aren't paying a proper control premium. They need to, et cetera, et cetera. And it's a point of contention. It's always been, especially if management and the board don't own a lot of the stock or didn't purchase a lot of the stock with their own capital. And you've got someone who came in and did purchase a lot of the stock with their own capital. They're saying, hey, look, I don't need to pay a control premium. I've put a bunch of money in. You have not put a bunch of money in. You're running the company. You're being paid to run the company. But I've put a bunch of money and I now own this piece, and I want to have a say, or I want to have board seats. And it's an ongoing thing. It's really pretty fascinating. But anyway, in this case, there was a sort of a control premium established. And this $75 million discount gave a little bit of I don't even know what the word would be, shoehorn or something. It gave a little bit of sort of, if the transaction didn't go through, there was a little bit of a sway in terms of the amount that Liberty Media would own and the price that they would own it at, which would leave kind of a short step to a liquidity event if they needed it, if the sort of the next step did not go through. So it was a bit of an insurance as well. But it's interesting that it notes the control premium, and that's a whole nother episode. But okay, so we'll do that again. Watch that Aswath video. It's kind of cool. It's interesting. Anyway, so as negotiations continued back and forth, on October 2nd, 2016, the two parties entered into a new confidentiality deed to represent the current stage of the process. On August 7th, 2016, CVC sent a revised term sheet with an aggregate enterprise value of $8.045 billion and a request for guarantees that certain stockholders of Liberty Media would vote in favor of the tracking stock issuance by Liberty Media that would be used in this purchase. Liberty Media agreed to these terms, and just of note, the shareholders in question were John Malone and certain affiliates. And again, I hope I'm not diverting or slowing down too much, but basically that what that means is that, to this newly issued tracking stock that would potentially form and we'll kind of go through the transaction at the end here, but this newly issued tracking stock that would form the stock component of the cash and stock consideration to buy the company would need to be voted on by shareholders to be issued. Voted on by shareholders of Liberty Media, this parent, to issue these new shares of tracking stock to be the component of stock in the cash and stock transaction, right? Okay, so what CVC was asking for was guarantees that they would vote in that manner, just to start checking stuff off the list going forward. Okay, so and then on August 16th, 2016, a board meeting of the directors of Liberty Media convened to review the transaction, and the board was satisfied and authorized approval to continue forward with negotiations. Further continuing to dive into more information related to Formula One, another confidentiality deed was entered into on September 1st, 2016, to kind of reflect these mostly highly confidential business information components of Formula One that Liberty Media and their representatives were reviewing. Then September 3rd, so again, this whole compression. I mean, if you look at, the initial meetings kind of and discussions began in 2013, but really it was May of 2016 before things really started in earnest. And then, of course, by September, the transaction was done. On September 3rd, the board of Liberty Media met once again and approved the terms of the transaction. The cash component versus stock component was discussed once again, and then on October 7th, both boards, independently and separately, Liberty Media and Delta Topco met and approved the transaction. Following the close of business of September 7th, 2016, New York City time, all signatures were completed, and the deal was done. So what did the deal look like? Again, the basics of the deal are that Malone's Liberty Media agreed to purchase Formula One for $4.4 billion and an assumption of its debt, the combined equity and debt, creating an enterprise value of just over $8 billion. Okay, so the entities involved are Liberty Media, which is a Delaware-based company, GR Cayman Acquisition Company, which is a wholly owned indirect subsidiary of Liberty Media, is the acquiring company. And then you've got Delta Topco, which is a Jersey-based company. For those that are unfamiliar, Jersey is in some ways the Cayman Islands of Great Britain. And then the CVC Capital Partners, who basically own the Delta Topco. The basics of the deal were that the purchase would be funded in $1.1 billion of cash, including the $746 million, the $75 million discount, and some other items. 138 million newly listed Liberty Media shares, tracking stock shares, and then $351 million in debt that Formula One could exchange into Liberty Media shares. Liberty Media would assume all $4.1 billion of Formula One debt, and this debt would be in the form of non-recourse debt to Liberty Media. Following the transaction, CVC Capital Partners, based on the amount of stock received, would own 65% of Formula One, but Liberty Media would be in control based on board seats and voting structure. The tracking stocks, basically, and there's several different series, but effectively the tracking stocks that are out there are for the Braves, for SiriusXM, and for Formula One. Those are Liberty Media's tracking stocks. So again, Formula One Group is the tracking stock that is of concern here, and that's what was issued. And so Formula One Group is the company, represents the interest in Formula One. So just to kind of be clear here, the Formula One Group is the group that owns this Cayman Island company. That's the Liberty Media's interest, basically out of Delaware, becomes known as Formula One Group, and that is represented and is synonymous to some degree with the equity of the Formula One Group tracking stock. And then I'll also just note, kind of for the uninitiated, seeing, and I don't have total detail on the way that they've done this, but just as a note, seeing the Cayman Islands company and the Jersey company with the ownership being in, Great Britain and Delaware accordingly. This is generally for tax purposes, and I'll just kind of explain a little bit here about how some of this stuff works. I know people hear about Cayman Islands stuff and this kind of stuff all the time, and again, I haven't done any research specifically on Liberty Media and Formula One, but generally the way that these transactions work are kind of as follows. So for those who may not know, the Cayman Islands, when you set up a company there, you pay fee to set up the company, just like you would in the United States. You might pay $300 or $500 to set up an LLC. Well, and then there would be tax considerations based on whatever state you're in and that kind of stuff. With the Caymans, they have a little bit of a different structure. Basically, you pay, something like $5,000 for your LLC, and that's it. That represents all the costs. That's all the money the government gets. They don't get any more money based on your profit. They just get the money based on the setup. So they sort of get their money on the front end. But obviously, from a scale perspective, that means that bigger and bigger and bigger transaction is going to have more and more and more benefit by going through the Cayman Islands because they're not going to pay tax. Now, the question becomes, how do you get the money in and out? And generally, and again, I'm not talking specifically here because I don't have the details here. But generally, the way it would work is you would have a Delaware company and a Cayman Islands company. The Cayman Islands company would purchase say in this case, and again, I don't know if this is the case here, but just let's use this as an example since we're talking about it. In this case, that Cayman Island company would purchase Formula One, but the Cayman Island company would need to get the money to purchase Formula One, this Delta Topco. So to get the money to purchase it, they borrow the money. And they borrow the money from Liberty Media based in Delaware. And Liberty Media charges interest to the GR Cayman Island Company. The GR Cayman Island Company may pay a dividend or pay something on this interest through its profits. And that money would go back to Liberty Media in the form of interest repayment, which Liberty Media would not be taxed on. And so that's kind of generally the situation. And again, from press clippings and things, basically that's how Delta Topco was set up, at least prior to this transaction. Delta Topco was doing a similar thing in Jersey in that it was paying, say it made $425 million or something like that, Formula One did. It would pay, $325 or $350 million of that in interest, and then have a smaller net tax liability of something of like 3 to 5% of the profits. So just again, kind of for the uninitiated, that's how that works when you start seeing things like Cayman Islands and that kind of stuff. But anyway, that's some of the basics of the transaction. And like I said, this is the first time we've kind of dug into a transaction like this, and some of the terms like these convertible bonds and PIK bonds and tracking stocks and Cayman Islands and these kinds of things. I don't know how much is we're kind of determining how this plays on podcasts and whether there's more information needed or less information needed, or if it's really boring. That's entirely possible. Or if it's hard to follow, or that kind of thing. We're going to kind of look through and see how this goes. But again, hopefully in the future there'll be more in-depth things, and hopefully we'll handle them better. But again, I hope you enjoyed this. This was kind of the basics of the transaction of Formula One, of Liberty Media purchasing Formula One. And at the time of this recording, Williams has just been purchased by Williams Formula One team has just been purchased by a U.S. company. And that might be something that we dive into as well and kind of compare to this and that kind of thing. And yeah, we'll kind of go from there. So, thank you for everyone listening, and we'll see you next time.